As the Finance Ministry begins burning the midnight oil for Budget 2025, a steep fall in the Indian Rupee is the latest challenge it must face. The Indian currency has had the rug pulled out from under it, plunging by a massive 61 paise on Monday to cross the 86 level for the first time ever. The fall on Monday was the steepest since February 2023. 2 months ago, the rupee was at 84.40 to a US dollar. In a month, it had slipped 39 paise to 84.79 before crossing the 85 level on 19th December. It took the dollar just 16 trading days to strengthen to 86 rupees. The fall has been particularly steep this winter. It took just 11 days in the autumn of 2022 for the rupee to slip from $80 to 82. The next 2 years were relatively stable, with the rupee taking 210 days to fall to 83 and another 277 days to reach the 84 level. The fall to 86 took a total of 63 days. This marks a 47% fall in the rupee under the current NDA government, against a 31% fall under the UPA government in 2004 to 2014. The rupee is still, however, more stable than the currencies of other Asian countries. This man is seen as the biggest reason behind the rupee's fall. His election has seen the US dollar strengthen against all currencies. Trump's vow to make the dollar great again and impose stiff tariffs against the biggest trading partners has hit currencies around the world. The other big reasons include an anticipated slowdown in pace of interest rate cuts by the US Central Bank, strong economic data in the US which has pushed yields on bonds higher, attracting investments, the massive outflow of foreign funds from the Indian stock markets in the past 4 months, a 14% rise in crude oil prices in the past month which has burdened India's current account. All these factors are seen pushing the rupee to 87 levels in the short term. What's being closely watched by economists and analysts is the impact. A weak rupee will raise India's import bills, especially with India's dependency on crude oil import being at 88% as per the latest figures. It will also raise prices of imported goods, particularly pulses, edible oils, fertilizers, electronics, ultimately pushing up inflation. All this economic push and pulls will negatively impact GDP growth. The rupee's defense has in part led to the Indian forex reserves falling to $635 billion from a record high of $705 billion 4 months ago. On a more personal note, financing a child's education abroad will become more expensive, as will overseas holidays. There's more silver lining as well. IIT, pharma and textile companies could see a boost in exports because of price competitiveness. Inbound tourism could also see a slight rise with Indian holidays getting cheaper. Ironically, it's up to the man who till recently raised rupees for the government to defend it. The new RBI governor, Sanjay Malhotra, has indicated he's not averse to a more flexible rupee, but will intervene to curb excessive volatility. This is a sharp departure from his predecessor, Shaktikanta Das, who kept a tight rein on the currency. Bureau Report, Business Today Television.